Afternoon, everyone. It's Chris from Axel as well as Solstice. You can find us on both websites at solstice.axelatrai.com or axelatrai.com. Remember, we are on Instagram, X, Discord. We use this adaptive algorithm for side market, up market, as well as down market. I hope everybody enjoys the Christmas and Happy New Year in case you guys are ready to head out. Next week is going to be a light week, short week. Remember, trading is going to be a little bit lighter. Volume would be lighter. Pay attention to the levels, and that's the most important thing. Use at your own risk. Let's go to the first slide that I have up here. And what I did, I put the S&P 500 3-month chart showing a possibility because this was the range in the last 5 days. This was the Monday, Tuesday, Wednesday, Thursday, Friday, and we cleared up here. But there's three scenarios I have up here because if I take the highs to the low, this is basically 0 to 100. Maybe we won't have 100% retracement to the top if we end up getting one to this area where the consolidation and that triple top. This was the November high. This is the November low. And this is the December high and the December low. If there's going to be continuation, I am paying attention to this area where there was a lot of congestion up in here in case we make it up there. That's scenario one. Scenario we look down, bounce back up, or scenario three, we fail and lose the Wednesday candle down to that area down here. So we're going to pay attention to what the charts offer us with the market profile. Let's go to the next slide. And what I did, I put the up volume, down volume in the Nasdaq 100. Not the Nasdaq 100, I should say, the New York Composite and the S&P 500, giving us an overall view. Every time we have a spike to the upside or spike to the downside, we get extended to the bottom. In December of 2024, we had this spike up and we had the minor correction. And in April, when we fell all the way down to this area below the 100 and let's call it 12 million, coming back, a million two, coming down in the overall up volume, down volume, we got a reversal back up. And we had the same thing in September and October, a minor correction. And we rallied back up, but in December, when we had the November highs, we came back in. Now we are inside this range congested area on light volume. Are we going to get a spike up to tell us, hey, we're going to get a reset, or are we going to continue back to the downside using the up volume, down volume on the New York Stock Exchange, not the Nasdaq? I made an error earlier by saying that. Remember to check us out at solstice.axelatrai because we're working on the Yada server at solsticeatr.com. Remember to smash the like button, share with your friends, and subscribe to the YouTube. The weekly video is always for free for you. Here I put the E-mini S&P 500 showing you the lows that happened on 11/24 to the high, and you can see the machine grab the support and the resistance, showing you the 38.2, 50, 61, and there's a 78% here and there's a 23 here. This is the Virgin Control, value area low. This is the VPOC, the point of control on the monthly, as well as the value area high on the S&P 500. This was the November high. This was the November high in 2025, and this is the low. If I do measurements, this is the area what I would look into. But what I want to do is break it down a little bit more further for you. You can see here on the daily chart, I put the E-mini 4-hour chart, 30 days going back, but I wanted to show you that there was a change in contract right up here from the Friday to the Monday. This is the high for the week. This is the low for the week. We are above the 50 and the 61.8. If I do get a Fibonacci and I measure this area, the reason why I wanted to show this is to give you an overall view of the levels up here, and you can see I use the measured move. I'm sorry. I'm going to show you the Fibonacci instead. This is the high, and this is the low. And I don't think I did the properties correctly in the setting. You always want to go in the setting because this one says no. You're going to do the open, high, low, and close in the general, and in the appearance you got to do the same thing. Open, high, low, close in general, push apply. This will activate the Fibonacci, edit the property. I'm going to activate it so we can anchor it correctly so we don't have mistakes update due to, it wasn't anchored. And you can see the ranges where we are. We just slightly underneath the 78%. And if I'm going to continue like I showed you, we're going to basically do a zigzag continuate, or do we just slide up all the way up here, or do we fall back in this range down here? So we're going to pay attention to those levels in relationship to the prior month. That big candle move in the prior month, we had the same thing, that big candle coming back up here. There's a lot of consolidation and congestion between here and that double top, if people consider this a double top, because this was the congestion on the S&P. We had clear it. Let's go to the micro and Q. And what we'll do the same thing on the charts, looking at the daily on the micro Nasdaq 100. Here I left the highs to the low to show you the differences between the Fibonacci that the machine grabbed for the December high and the low. So far we are inside the range. We have not, this is the value area high and this is the value area low on the S&P 500. But what we're going to do is remove it to show you a little bit more the consolidation here. You can see that we have not, when we came back up here, you can see we cleared this area, but this has a lot of congestion. If I look at this high here in this area, I mean, we are below. We created a lower high from here, and from here, from the low, we created a higher high. So this is in a symmetrical downtrend channel and an uptrend channel in a symmetrical triangle until we clear to the upside. So let's take a look at the 4-hour chart. You can see that this top was triple congestion and there was one up here. So if I take the weekly, this was the Friday. I'm not going to take the high from here to the low here. I'm going to take the Monday's high to the low in order to see where the extensions are. I'm going to use the measured move on the Nasdaq 100 so I can take the Monday's high to this low here, and you can see the anchoring. If I'm going to move up in the direction of the move, then I'm looking to continue higher. If it's going to be back to the downside, then I'll look for the bottom end on the opposite side. So we're going to trade what we see. Let's now take a look at I'm going to do the Magnificent Seven. I will bring it back to from a 4-hour to a daily. And what I wanted to show you is that Apple, Amazon, Google, Alphabet, Google, and Google, Meta, Microsoft, I have nvda and Tesla. I included Netflix in there, and you can see that consolidation after the on AVGO as well as Oracle. We had that major move down. We tried to rally, but we are in consolidation. If I take a look at the overall week from here to down here, so I can get the measured move from here to down here, and we can see we are above the 61, barely above the 61.8. So in order for us to continue, we got to pay attention to these levels in order for continuation. So if I look at it on the daily 3-month time frame, we can go daily. What I'm going to do is here show you the 3-month on a daily chart on the combination of those instruments so you can get an overall view where we are from that prior high. If this is the high, there was a shoulder here. I'm not going further back. This is the right shoulder. Is there going to be an uptrend channel? Because we're creating higher highs here, but we are in a downtrend lower from this area here. You can see that this high and this high, if I connect them, we are in a symmetrical triangle until we resolve out of the tech sector on the Magnificent Seven, including Netflix in there. So if I go back to the red, so we're going to uncheck this for a second. And what I wanted to do is show MU on the daily chart to show you that MU on the earning report, it gapped up on the earnings, sold off this candle, but it was green due to the gap up on the earning. Then because that was a sell down, then they brought it back up and continued higher. So this is MU. So if you look at it, that looks a little bit different than OCL. And I wanted to put Oracle up here to show you on the earning report. That was the earning report. We gapped down. We're trying to recover on this gap up on the news that came out on Friday. So that's one thing to consider. And I'm going to show you now still nflx. I'm not going to go to Meta or Microsoft, but I'm going to show you nvda. You can see on that the split here Netflix, after the earning report, fell down, trying to consolidate in this area. I have this box up here on the daily chart. I am paying attention to this area between the 90 and the $98 range. In case we get a breakout, there's going to be continuation reversal back up to the upside. So I'm going to do the same thing with zone, and I'll show you Google. You can see NVDA has been in that major range after it created that shoulder. That's the head, that double top. I consider it that major move down on the earning report created a right shoulder. We have not been able to take out that 186. You can see it. It's F3 from the high to the low. That's support, resistance. There's a 23% we are holding, but we have not cleared the 38.2 fib in order to get to the 50. If there's going to be continuation, there was that major move down from here, then we're trying to come out on that news that came out. This is what saved the market. Basically, you got the chip manufacturers, you got the storage units and the facilities. So you can see what's going on, in those sector rotations, and you can see that move back up. But am I staying out of the way? I'm trading on daily basis, short positions, in and out. I'm trying not to, harm the account till 2026, that we can do an overall view of these different sectors in the S&P as well as the Nasdaq. Because if I take a look at the XLK, oops, this if I take a look at the XLK, you can see that shoulder, that's the head, that's the right shoulder. We're trying to recover, but we have not taken out this candle or this candle here. We just barely touched it. If there's going to be continuation back to this consolidation area here, or we're going to come back in that range. Remember, it's going to be light volume, and I'm going to show you SMH, and I will show you the fear gauge. And you can see in the semiconductor sector, that double top, we were creating a crab. We rallied up, we fell down, bounced off the 61.8. You can see the machine grabbed this high and this low, or even if you grab the November high to the low, we recovered above, the 61.50. We're above the 38. We're coming into the 23. Is that 23% in this area going to act as resistance or not? So we got to pay attention to what the overall market offers you. Let's take a look at the VIX, and I'm going to use the VIX instead of the VX because we can trade the future. You can see those major spikes up here in the $28. We tried to go back in the $18, $20 range on that last move up. We failed. We are bottoming out on the VIX. Is there going to be continuation on the weekly? Because if I go to a time frame and I do daily, we can go to a 3-year or 4-year. I'm going to do this on a 4-year. Let's do this on 5. I'm going to go to a weekly chart. So to kind of, let's do it on a monthly. That may look a little bit more cleaner monthly. Just to show you, every time we had a spike up in the market, you can see that April, that VIX spike up and the reset, and we had these two on the fear, of inflation, cost of goods, and unemployment, government shutdown. We had these spikes and fell back in, and you can see in 2023 when we were ranging the upper distribution, we had that little spike in March. Then eventually we continued higher. Then we had one in 2024. That spike fell back in, and we continued rallying. That was the December spike, and we fell back in. Remember, in the market. Then we had this April, and now we are in the bottom distribution. Usually when you are in that $10, $12 range, the VIX is basically bottoming out. Most people are not going to look at it to purchase it. So this is a way to ensure your portfolio in the future. So this is on the VIX. Let's go back and put this on a daily time frame. Intraday, we're going to do 30 days like we had before. So we can flip-flop between them, and we're going to do 4-hour chart. And you can see where the VIX, we had that spike up in the prior week. We fell back down. We tried to spike up, and we couldn't get above that 20 area range. You can see that high here in this area here in the 18 to 20. So once we get in that area, then we have to reconsider where to reevaluate your position. So we're going to go to red like we had it before. That's the Nasdaq. And what I'm going to do is do Google here. Google And I'm going to go to the S&P 500 and break it down for you in a little bit more better detail. You can see that Google, after coming back to this area of range in that consolidation where it had those tops, the breakout, look below and breakout, we came back, retested this area. We kind of bounced off, but we are still in that downtrend channel. I am paying attention in case of a breakout. So I'm going to show you a kind of a simple setup. You can draw a linear regression, a downtrend channel. You can see it on the chart, and we can duplicate this channel and bring it down here, and you can duplicate it this way. So to kind of get an overall view, it's a little bit on an open cone, but if I do not activate it from here and I grab it from this area here, from that breakdown where there was that consolidation here, and I bring it down, that's a linear regression uptrend downtrend channel, and we are above the 50%. If it comes back in this area and bounces off, that would be great. We'll look for the backside of the channel on Google, and if you look at it on the daily, that's your linear regression in a symmetrical, because we looked below, we consolidated here, remember, at the 241 and bounced off. If there's going to be continuation, we're going to pay attention to that 18 SMA in the backside of the channel, or coming back to this backside of the channel. Either way, we trade what the charts offer us, not what we think. And if you want to look at the volume profile and monkey bar, so let's do the EMA micro ES instead of the Nasdaq. I'm going to do this time the S&P for everyone to see how to look at it, measure it, understand it. Remember, we did this Fibonacci on the charts earlier. So what we can do is right click on it, edit the property. So if I want to change this or make it into a measured move, I'm going to activate it. Watch what I'm going to do. I'm going to activate it, move it to the prior month's range, which was here, and the prior month range down here, which was last month range, to know where my levels are, because this area coming up in this area may be exhaustion. If we break up, that would be great to the upside. If we break down, then we look for the halfway back for continuation or not. So I'm going to change the edit, this property. You can see the levels on the chart. I'm going to change the coloring, make it into like a cream caramel color or a beige color, so I can differentiate between the monthly, the daily, and the weekly. And what I'm going to do here, move this to the right side. You can see where my measured move is. We're going to go get the measured move on the charts. We're going to take the weekly high to the low. I'm going to activate it, move it to the left, edit the property. You can see the extension from 0 to -1, from 100, which is 1 to 200, and I'm going to make him into cyan color, so that way we are aware of it. And I'm going to edit the property one more time because I clicked too fast, and I'm going to move it back to 10-1 so everyone can see where those levels are on the charts. When I put them across, you can see where that consolidation and that 50% between the 80 and the 61, consider this like a 78%. There's actually a 61.8 in case we do come in then continuation, and you can see F6 is the 61 support, and you can see support and resistance, but I do not have the extension. So in case we come in, we continue, or we break above the 78 and continuation to the upside on the S&P 500. I hope this video was very helpful. And if you have any questions, please let us know. And what I want to do is show you the monkey bars. We're going to go style. You can go in here and stay in charts on the TOS or Schwab account. Monkey bars, it's going to show you here I have 30 days, 3 days, 30-minute. This is the daily chart. You can see we have a poor high. This is on auto. We can go in here in the setting. What I wanted to show you in the setting where it says appearance, instead of auto, put it on tick chart. It's going to basically give it a little bit more of a different look, because it's going to compress it and give you where the gaps are in relationship, because I consider this is one distribution, this is two. We can see we had on Wednesday upper distribution, we fell in, we created two distribution, and on Thursday when we cleared this distribution and we came back up. And you can see here on Friday we pushed up a little bit higher, but if I'm going to look at this, I consider this as two these are the peaks where the point of control. This is where most volume happened, and the time spent in relationship to the highs and lows. If I consider this is the value area high, where that gray area is to the top, and if I do this, zoom it in a little bit, what I want you to see is basically the overall range on the charts. This is value low, this is value high, this is the point of control. And if I want to stay above the point of control on coming in on Sunday when the market opens, if there's going to be continuation or not, I'm going to pay attention to that point of control, or are we going to gap up? And this is why I zoom in to see if it's got a clean top for continuation or not. Usually when you have a poor high, it's just basically you got three TPOs next to each other without a wick up on the candles, and this will tell us if it's a poor high or a poor low. Like in this area down here, if I zoom down from the time spent from halfway down and I grab this area and I zoom down here, you can see this has 1, 2, 3, 4 TPOs and a clean bottom in the overnight action. I hope this video was very helpful. If you have any questions, we're here to help you. Take care. Over and out. And once again, check us out at solstice.axel.com or get in contact with us at the bottom number right there. Take care.